Let me take you through a very common question, which is people will ask me, okay, how little money can I start with when it comes to trading? Well, I do that in a different video. And then they ask, how often will I be right? What kind of return should I be looking for? So let's work on a little business plan. Let's make it straightforward and simple. And I'm going to kick off with it now. Okay, let's say you do 20 trades this month. And don't forget, that's only one per trading day. So it's not that many, or you might batch them up into 5 a week. Maybe on Fridays you'll do 5. How to find what to trade, I cover in a separate video. Okay, but for now, let's just look at the business plan aspect of it. Let's keep things simple. Let's say you're just a little bit better than a coin. So my job is to give you a strategy or improve upon your own, which makes you a bit better than a coin, better than 50-50. Now you might say, well, Alpesh, why aren't you right all the time? Why are you not just, you're supposed to be a superhero of trading. You've written all these books on trading. How come you're not correct all the time? Well, let's be realistic and let's be honest, okay? The best hedge funds in the world are only right 50% of the time. We want a slight edge. We want to be a little bit better than 50%, bit better than a coin, okay? So let's say we win 60%. In actual fact, on our algorithms, over a long period of time, we get over a period of 100 trades, we expect to be right about 70% of the time, okay? If we have a winning streak, we might be right 10 times out of 10, but we might also have losing streaks, okay? Just like a coin has a streak of heads and a streak of losses. But overall, over 100 trades, we expect to be right about 70% of the time. But remember, a coin's only right 50-50, so we're a little bit better than a coin. But let's assume we're going to really tone and dial it down, and we're only right 60% of the time, okay? So that means 12 trades, 60 times 20 would be right on that basis. Let's say you make 45 points or pips. Just keep it really simple when you win, and you lose the equal amount when you lose. Now you might say, what? Why are you not winning double the number when you win, and so on? Let's just keep things really basic and simple. Let's not try to be a superhero for now. So we're not winning all the time, and when we win, we make as much as we lose. That's pretty humble beginnings for a business plan. But the more humble the business plan, well, at least we'll get the opportunity to exceed it. So just bear with me on this. So that's 12 wins, which must mean 8 losses out of those 20 trades. That would mean a net of 4 wins. 4 times 45 pips means 180 pips net you've captured. Remember that. So the question becomes, how do you make 1K, whether it's $1,000 or £1,000? Well, the question to ask actually isn't how do you make 1,000 pounds. It's sort of that, but it's actually, what if you had 3 consecutive losing trades? What would happen then? What would happen then? That's the question to ask. So let's answer that. In our business plan, remember the question is, how do you make the first £1,000 or dollars? Well, what if you had 3 consecutive losing trades? Let's look at that. 3 consecutive losing trades. Remember, it was 45 points per losing trade. I said you'd lose 135 points. Okay, you'd lose 135 points or pips. Doesn't matter whether this is spread betting, CFDs, futures, options, none of that matters for the moment. What if you say, well, Alpesh, if I have 3 consecutive losing trades, I only want to be down 20%. Now, if you're a hedge fund like me, that's too much risk. With other people's money, that's too much risk. You know why? Because there are other funds my investors could have gone to where if they have 3 consecutive losses, they won't be down 20%. And so I've got to compete with that. So I've got to say, okay, I'm going to take less risk. But you as a private investor with your own risk capital might be willing to take that risk. That's personal choice. Let's see what happens if you were to take that risk. Well, what if you only want a maximum of 20% loss of your total £1,000 capital after 3 consecutive trades? If after 3 losses, you want maximum 20% of 1K, i.e. you only want to lose £200, that would mean that each trade should be £1.50 per point, okay, or per pip. Now, your broker will calculate this. For instance, if you buy, I don't know, Barclays shares, you can say for every penny it moves up, I don't want to risk losing more than £1.50 or making £1.50 per point or per pip. Okay, whether it's spread betting, CFDs, futures, options, can all be translated into this language, right? So that's a slightly complicated bit, but don't worry, it's simple once you get the grip of it. So 180 pips profit over 20 trades. Remember, it was 180 pips profit over 20 trades times £1.50 per pip would mean £270 profit in that month. Okay, it would mean £270 profit net. Okay, after all your losing trades and winning trades, that's what you'd be ending up with on this calculation. Well, you'd therefore need 4 months because 4 times 270 is effectively £1,000 to make £1,000 with your original £1,000. But remember, you're taking more risk than I'd like to take as a hedge fund, but as a private investor, you might be willing to do that. Right, simple enough. How long does it take you to make 1,000? Takes you 4 months. But let's say you wanted to double the risk because you're willing to. I don't recommend it, but let's say you did. So instead of £1.50 a point, you did £3 or $3. Then you could be down 40% if you have 3 consecutive losing trades. Way too much. But you could make your return of £1,000 in just 2 months. The reason I say to people, take more time over it, don't try and rush it, don't take too much risk, is this. Once you've learned the skills to make 1,000, you've got the skills to make 2, you've got the skills to make 4. Though nobody's going to switch the market off. So I'd rather you took more time and risk less capital than try to accelerate too quickly. Because the constraining factor, which people don't realize, is what if you have a string of losses? What do you look like then? That's the most important thing to answer. Now, if you like what I've said here, there's far more free information I've given on my website, www.trading-champions.com, and on www.pipspredator.com as well. Have a look at either of those two, and you'll see a lot more of the kind of great stuff that I've been teaching on there.